I'm super excited to be here. And thanks for hanging out with us in the office today.
Appreciate it. And you've been on the speaking circuit recently. You had your AGM last week. You guys announced your latest fund. Foundation's got a lot going on.
We have our annual investor conference. We also have investors that we have to, kind of report back to and all that stuff. So we see them once a year and tell them what's going on. And we did raise a new fund, $600 million for seed and Series A stage.
Congrats. And just reiterating again, you yourself and the whole foundation team have been such incredible partners for GTM Fund, and now got some co-investments on the board. Latest one, Anatoly, where are you at? There he is.
Oh, wow.
AI or not, which is super, super exciting. And yeah, just again, if you're looking to raise and you get a chance to have a discussion with Joanne or anyone on the team, run to that meeting, don't walk, as I said. And Joanne in particular is one of the best AI investors out there, in my opinion.
Oh, you're way too kind. And we just saw AI or not present this morning, so good to see you in person.
Awesome. He's doing super cool stuff if you haven't chatted with Anatoly. But you have this really interesting view. Obviously, you see a ton of different AI startups. You spend a lot of time thinking about it. So I wanted to spend this 20 minutes just talking about some of the broader themes you're seeing and why it's relevant to founders in this room. So what are some of the trends you're seeing in the broader AI landscape that you think founders should be conscious of and be thinking about?
Okay, you had to answer the same question. But this is easy since we just had our AGM last week. I think for us, so as a firm, we invest in 80% applied AI or AI infra, and about 20% crypto applications, infrastructure, developer tooling. So that's kind of the main focus for us, and that's been the focus for, like the last decade or so. Those two main tech trends. On the AI side, a lot of the work is around the application layer, which I think is capturing more value these days, especially as some of the foundation models become more and more commoditized, cheaper, easier to use. And so we're seeing, historically, we've invested in a lot of horizontal solutions. I think you guys have too, sales, marketing, HR, et cetera. And then I think more recently have definitely seen a lot of traction in the verticals that we have backed, just because a lot of the some of the work that's been done by people are now done by machines, because of the ability to process unstructured data, which is I think what a lot of the work has been. So we have companies like Fulcrum present this morning, which is doing a lot of insurance brokerage automation. Tenor, which is doing like back office healthcare automation. Reggie, Jasper on the sales and marketing side, marketing and sales. And everyone is talking about workflow automation. Like, what is the work that someone does, and like, what can we do as a software vendor to complete it? So that's on the application side. And on the infrastructure side, I think the areas of interest, I think compute has been hard. We have a few companies in compute, Cerebras, which is waiting to go public soon. Anyscale, which is also in that bucket, but it's a really hard subsector for us because of the CapEx requirements. And then we've invested in security companies because there's more data, more models, more security risk vectors. We've invested in a lot of model ops. So Arise, for example, is one of our companies that's helping companies like doing monitoring and testing when models are put in production. And then we have a lot of data infrastructure companies as well. So Anomalous, which is kind of helping with data quality and detecting when data is not the right data. So both on the applications and infrastructure side, I think there's just tons of new opportunities that we're excited about. Yeah. How about you guys?
I'll just kind of pile on to one aspect you mentioned. So we have done this amount of call it horizontal applications in the past, and what's personally exciting me, I think, right now is this trend to attack really unsexy parts of the economy using AI. And, I keep learning about, what the job of a customs broker is. And, we don't spend a lot of time in tech thinking about that. But when you dive in, there is just these incredibly outdated solutions that they're using. And then you double click on these like incumbents and they're billion-dollar plus companies. So the opportunity is there, but innovation hasn't happened in a really long time. They all have really low NPS. They're sort of like the mafia because they're the only player in town. And so there's this incredible opportunity instead of like horizontal, which you can still, I think, build a great business, but you're fighting for these like 3 to 4% efficiency gains here, time savings here, cost savings here, versus you go to some of these unsexy verticals and you try and own that. You're talking about like a 30, 40, 100% efficiency gain, which is a fundamental, like truly digitally transforming a business. So that's where I'm spending a lot of my time right now. Customs broker. We originally just recently did Doc Unlock, company called Gaia, basically automating what a telco ISP has for workflows. Thank you so much. So that's some of the things we're seeing. And then the next question I wanted to ask you, and from your investor lens to room full of founders, it feels like more and more every category is getting really crowded. And you probably talk to 5 or 6 companies a month that look pretty similar. How do you coach founders to differentiate in a really crowded market where a lot of people look and feel the same?
I guess this depends on if you're raising a seed or a series A or a series B. I don't know what stage you guys are at. Like, is it mostly a
Seed stage, hands up.
okay,
A, hands up.
as in raising an A soon? Yeah. So I think on the A, what I find is that the bigger firms want to invest in companies that could be number 1, 2, or 3 in the market. Maybe not today, but it's got to be top 3. If it's not top 3, it's just going to be a really hard fundraise, right? And I think people evaluate top 3 differently. Some think, okay, maybe if you have like the faster velocity than others, maybe it's that you have great investors for your seed round. I don't know. Maybe it's like the backgrounds of the founders, maybe some combination of that. But I think the most important thing is to convince this investor set that you're going to be number 1, 2, or 3, right? Like that's kind of how I think the really successful Series A's are done. And then for the seed, when there's like not much proof points, and we invest oftentimes pre-revenues. Our first question is, first, do we believe in this market? And oftentimes we've done the work to kind of validate that. And then the second question is like, can this team execute for the next 12 to 18 months to get to that first small semblance of product market fit, right? Because a lot of our stage companies, don't end up getting there, which is totally fine. But you have relatively limited resources to do that, and so like we tend to invest in pre-revenue teams that we believe have a higher probability of getting there, and that could be because they've talked to more design partners. That could be because if you're working on infrastructure, they have like a background that convinces us that they can build large-scale distributed systems. It could be that they are learning stuff faster than other teams week over week, but something to give us the confidence that can be done.
Yeah.
How about you guys?
Yeah, I'll underscore that. I mean, we talk about all the time, especially at the seed stage or even pre-seed stage. It's like, what is the earned or learned secret that you have that the market doesn't know yet? Why can you see the future that nobody else can see? And oftentimes there's that, at least in B2B, that comes from experience, and I'll give an example going back to Gaia. The founder built the fastest growing telco ISP, in Canada. And so then who better to go and build the software for telecommunications ISPs than him? So I think really thinking about your story and your background and why you can predict the future better than, the rest of the market can is really important to underline. So going back to kind of what we're talking about of like value creation, and you mentioned the application layer. If you're putting on your Nostradamus hat and you're thinking into the future, where do you think the value is going to be created near term? And maybe we can say the application layer. And then where do you think it's going to be created long term?
In terms of like which part of the tech stack?
Yeah.
I mean, I think if you look at history, it's always been a back and forth between value capture on the application side and the infrastructure side, right? Because as the application side gets more mature, then it puts more pressure. So, for example, if you have an explosion of AI apps, then you're going to have an explosion of security issues. That's created by the usage of AI because you're using more models and more data, and people are now attacking these applications via those vectors, right? So then you have a infrastructure subsector that becomes more robust. So I think we're always going to see that dynamic of back and forth. And today, I believe we're in the application value creation stage. If you look at like the market cap historically, it's been about 2/3 app, 1/3 infra. Um, just from a like large like enterprise software companies, and I suspect that might still stay pretty consistent. As a firm, we haven't invested at the foundation model layer because I think that is one where most of the incumbents have a lot more power because of their balance sheet. And it's oftentimes a loss leader because everyone's competing on the capabilities and they had to sell something else to make up for it, right? Like cloud services or tools or whatever it is. And most startups are unable to execute that with the exception of a very few of them because they don't have more than one product. They don't have the resources for that. So we have largely stayed away from it. And now all the open source options are, getting better and better. And so I think it just puts even more pressure, at that layer.
Yeah. Going further, Y Combinator recently in their recent batch only invested in agents. Do you think we're headed towards a future where software companies just become agents?
I think there's a lot. We wrote this blog post called "System of Agents" that like got a bunch of traction, and I think it's some of it is more of a business model shift than it is actually a technology shift at this point. I think on the business model side, because LLMs are powerful and multimodal models are becoming powerful and cheap, you can process unstructured data. Like that's true, right? And maybe the agents are calling different models and doing different tasks, and that's great, right? And you can charge on consumption. But I think when I think of agents, truly, I think of agents that actually interact with each other and learn from each other and do things better over time. And I have yet to see that really in production because it's very non-deterministic what these things can do. And I think enterprises have a hard time being okay with such non-deterministic outcomes. So what I've seen in truly what agents are doing now is like they're in maybe development where people are mapping out the processes or people are kind of thinking about maybe in game creation or in like R&D, like there's some agent stuff, but it's rarely translated to production in a way that is thought about or talked about in academic research. Is that going to happen? Maybe. But I think today what's happening is like these processes are mapped out. They're translated from a deterministic standpoint to software, and that's what's getting sold to enterprises.
Yeah. Yeah, it kind of goes back to we had a pricing strategy earlier, and we talked a bit about outcome-based pricing and how that can fall apart because large companies want repeatability, they want scalability, and it's hard to understand, what my bill is going to be if I'm doing all these agents and it's all outcome-based stuff. So
There is a lot of push around observability of how these things are going to behave. Like we see kids out of Stanford labs are like working on some of the stuff. But I have yet to see something that's like truly commercial, which actually brings enough transparency.
All right, final question as we wrap up. I think many folks in this room would love to work with Foundation Capital and get the attention and a tier one VC on their cap table. What is your advice to founders to make that happen?
I mean, you should come talk to us. We have a lot of money. We're trying to invest. We write checks between $1 and $12 million initial check. We lead rounds. We have ownership targets between 15 and 20%. And I don't think there's that much of a secret. I mean, we care about backing exceptional founders who want to do exceptional things and markets are awesome. And, if you guys are doing that, or your friends are, please come talk to us.
Joanne is open for pitching. No, that's awesome. One more is, if you weren't in this room right now,
Yeah.
how does someone get your attention, let's say in a digital format? Let's say they're going after another investor. Like, what makes you respond to an email quickly? What makes you take that first meeting?
I mean, okay, every introduction that Scott has done for us, we've taken the meeting. So, you guys already know the most important person here. But I think warm intros are definitely a little easier. Just if it's from another investor, great. Even better if it's a founder that the investor has already backed. I think that's probably the most powerful. Or like an angel investor that doesn't have as much bias, right? Like if it's your lead seed investor, of course they're gonna say that it's a great company. But if it's an angel investor, a little bit less bias, and if it's a founder, even less bias. I think, right? So like I think the investors like to take intros from other founders, which they feel like maybe are a little bit less biased in this process. If you don't have any connections, I mean, I think reaching out on LinkedIn, on Twitter, on via email. I think those are all great. I mean, we've done deals where founders have reached out to us after we wrote some content around like a topic that they're working on, and we say, hey, like if you're working on this, come talk to us. And that has definitely led to investments. So, but you may have to try a couple times just because it's kind of noisy.
Awesome. Well, Joanne, thank you so much. Appreciate you. Appreciate your partnership.
Thank you so much. And awesome to see everybody.
Awesome. Thank you.
Thank you.